Global markets are taking a slight breather from the equities rally witnessed in recent weeks, with Japanese and European markets seen suffering some losses today. The local all-share index is bucking the trend up in positive territory, with financial counters lending support. It's gained over 1.3% during the trading session. The local currency has continued its firming trend, touching 11 Rand 94 against the US dollar.
While most markets were cooler today, the general global equities trend has been a positive one for a number of reasons.
What we can call a bull market on the back of earnings is continuing, and then on top of that we have the tax bill as well being managed to be passed in the US, also helping, and also the fact that the US managed to get around the shutdown up until the 8th of February. So that continues to help the markets, but more importantly, the earnings are the ones which are driving the markets.
The local currency dipped below 12 against the US dollar, a level not seen since 2015. Analysts are attributing the strength to a generally weaker dollar, with some of them also putting it down to local circumstances.
The rand started by breaching that resistance of 1350, then it continued to that one of 1250. So I think the challenging one is to see if they can breach the 1170. And so far things are looking okay for the rand, and more importantly we have seen that the dollar itself, it has been weakening since the beginning of the year at the back of rumors that the likes of Japan, the likes of the European Central Bank might start to remove the stimulus, the monetary stimulus that end. So that also weakened the US dollar, and our own doings back home here. People, markets, they like what they see so far when it comes to policy, when it comes to the likes of the ANC. So yeah, so far we're still looking okay, and chances are we can hit that 1170.
But the budget is around the corner. Finance Minister Moodys will have to produce a miracle to raise 40 billion rand to fill the current fiscal gaps, and ratings agencies and markets alike will be paying close attention to the announcement.
We know what is required from us. The likes of the rating agencies, they've indicated clearly what is it that they'd like to see, and we have seen the likes of Cyril starting to implement some of those things, especially starting with the state-owned enterprises. And come the budget, we know that Moodys is only waiting for the budget to decide whether they're going to downgrade us or not. And by all means, I think Treasury and whoever's involved, they will be taking a big chance if they don't make sure that they satisfy the Moodys, because we cannot afford a downgrade from the Moodys, because if that should happen, then we are talking almost plus minus 200 and so billion rands that immediately can get out of the country, and that will be weaker, or it will be negative for the rand going forward.
Meanwhile, beleaguered retailer Steinhoff appears to be getting support from banks who are willing to restructure its debts so it can continue to fund its operations. The firm has been frantically working to raise 16 billion rand since last month. It managed to sell some of its PSG shares, raising 7.1 billion rand earlier this week.
They're not in the business of repossessing things. They're not in the business of running those kind of businesses. They're in the business of lending out money. Sure, it is to their interest to see that the business succeeds and they get to be repaid.
Steinhoff is under pressure from the JSE, which has given it a deadline for the end of February to produce its annual 2017 results. If it fails to do so, the local exchange says that it will halt the company's ability to trade bonds, which will make it almost impossible for it to borrow money. Nompumelelo Siziba, SABC News, Johannesburg.